The S&P 500 falls nearly 2.5% in 80 minutes, which turned the day into the worst November beginning since 2008. Why is this important? Because a wise man once said, when they panic, we pounce. It's time for us to make money here. You might have missed the dip of 2022. You might have missed the dip of the recession in 2008. But guess what, family? We get in another opportunity to shift that generational wealth from these billionaires all the way over to us. Whether you be a person who doesn't have $10,000, you don't even have $5,000, you don't have $1 million. Family, these are the chances for us to take a step from where we are to the next level. If you're ready for that, put a heart in the chat. Let's get to the bag. There are 4 things that you need to know that are going to help you to get to that next stage. I want you to talk to a licensed financial advisor in your area. Investing does carry risk, but like I told you in the past, you got to risk it to get the biscuit. Many of y'all have seen me make enough money on Google stock, Amazon stock, Apple stock, all 3 individually to pay off my first home. And I want to show y'all how we get into it from not having to fear when other people do. Here's a quick example. The first thing I want you to learn is how to buy a put option. If you know how to do it well, you can turn a little bit of money into a lot of money. Here's an example. This is what an order looks like of a put option. It says that I bought the SPY $673 put option. I underline the important parts. I paid $4.94 for it. And then I bought it today. And then at the end of the day, when the market was closed, we could see that this thing was worth $20.42. Why is that important? Because imagine that you put $400 into something and then at the end of the day it's worth $2,000. How did this happen? Because with put options, when you buy them, you can make a lot of money on the way down. Family, if you're looking to make a lot of money on the way down and then on a bounce back up, put a heart in the chat, family. I want to give a shout out to one of my students who just did exactly that. Got into a put option and made over $4,000. Again, salute to KGU. How you get my buy alerts? The link is in the top of the description. You book a call with my team and I tell them you rolling with me because you're tired of rolling alone or you're tired of rolling with others who are not helping you to progress. And in there, I have a section called Ask Keenan that I only let a few people be able to interact with. And this one is where I send you voice memos, as in you tell me what trade you're in, how you're looking at it, and then I get back to you literally one-on-one. And that trade that I told you about earlier, that was a buy alert that I sent out just today during the live streams. I look forward to seeing you over there, family. I opened up the calendar because I want to see more people have an opportunity to be a part of the team, because I know many of y'all are trading alone and trading in the dark, and that's done with. I want you to have that clear guidance so you can learn how to win and take the L off of learn so that you can earn. The next thing that I want to teach you other than put options is how to buy things low. Let's look at Advanced Micro Devices, which is AMD. AMD is currently $206. It fell $17 in a single day, aka 7%. What is this telling me? It's very likely to keep coming down into the $100 range. Not the 100 flat. You might see it at your 190s, your 180s, but as we see this thing come down, it's gonna do something that we like. If you look on the bottom right, you can see it says PE, FWD. That means the forward price to earnings. In modern tech stocks, it's about 30 where you see that number, but right now it's still 60. When we see AMD hitting that number, this is telling us that even if we are approaching it, that it's getting to a price where it's gonna be a good buy level. So we wanna pay attention. The next one, which is already a good buy in my personal opinion, is Meta. Ticker symbol META. Meta is currently $589. If I can pick this up in the 400s, I absolutely love it down there. But right now, right here in the 500s, I love it there too. Meta, I just told you that when you look at the forward PE, even if you don't understand it yet, understand what number you're looking for, like a 30. It says the forward PE is a 20, and the current PE is still even lower than 30. The current PE is at the 24 to 26 range. So Meta is looking like a stock that is a good buy at this current level today, in my personal opinion, for a grand bounce back. It doesn't mean that it won't go from 589 to 550 or so and come down even low to the 500s or 400s, but it means that if I'm buying it at these levels, then when the whole market decides to come back, which could be in a few months from now, then Meta is going to be one that I can make a whole lot of money with. And the lower I get in, even if I'm buying it here and then buying it lower and then buying it lower, then I'm going to be able to basically double my money with Meta. Let's look at the price targets on it. Price targets are 862, but the fair value, when you think about how much money this stock makes, is about 850. I often bring you up to the idea of fair value. And the reason I want you to understand that is because it's like this. When we're looking at all of these companies, you got to think, what is the purpose of a company? And the purpose is to make money. So let's say that you were looking at a job and not just a company. And your job is telling you, all right, if you do this task, we're going to pay you $100,000. And then another job is telling you, if you do the same exact task, we're going to pay you $200,000. So then you're thinking, wow, same task, and this one's going to pay me $200,000, but this one's going to pay me $100,000. Oh yeah, the $200,000 for the same exact task. This is a better value. This is more of a fair value to me. This is what I want. So this is what we're looking at with Meta. Meta is a Mag 7 stock. So we want to see the Magnificent 7 eventually run back up again. But if we are looking to get into Mag 7 stocks, we got to think which one has the best fair value, which one is going to give us the most bang for our buck. And you look at that by looking at the PE ratio and looking at the fair value together. And they give you an idea, not the whole picture, but an idea of what could make sense. And then I want to give you some statistics on Meta because I went and dug deep and did the research, as I always do. Meta stock historically has an average return after a 12-month period following a steep decline. It gets up 75% after that steep decline in a year. Why is that important? Because a steep decline, according to this, is defined by a 30% drop in a 30-day time frame. So 1 month, you get a 30% drop on this. You could expect on average a year later after that, then you're going to be 75% up on your Meta, which makes sense because we're looking at it for the potential to hit the floor and come on down. And then a year later, boom, to on average go up 75%. However, understand now that Meta is a bigger company than it's ever been. The decline is going to be big, but then the bounce back is going to be big too, but not necessarily as big as 75%, potentially even 50% or around, which lines up with our fair value. We like that, which gives us a price of like 800, 850. And I want to put this in perspective. If you get in at 500 and it goes to 800, that's a really good deal. But if you get in at 400 and it goes to 800, that's an even better deal. Just to put into perspective why if you buy it low and then you buy it lower, but it's a good company, then it makes sense to try to keep buying it and invest, not just be a trader of it. I have a median return chart. After 30 days of Meta dropping, about a month later, it's still in the negatives a little bit. 3 months later, it's usually up 21%. 6 months later, it's usually up 55%. And 12 months later, it's usually up 74%. Meaning, in a year after a huge drop, you're very likely going to be punching up to the upside in this one. No guarantees, like I always tell you, but this is how you got to play it based off of the history, based off the charts, based off the statistics. And then when you realize one of the reasons why Meta is falling, it just goes with the territory. They're saying that retail traders are split about whether it's a buy or a falling knife. If the retail investors are split, they oftentimes don't understand the full picture. So then that gives us an opportunity to let them make it fall and us to be able to buy it. I want to put Bitcoin on your radar too again, because like I said, if we like Bitcoin at 90, we got to love it at 87. And then if it comes down to 74,000, this is the low on the year. That's going to be a huge level of support if we come and approach that. If it's coming and hitting that level, we want to be aware, because that's where I would even load up again and go a little more heavy. However, I'm personally going to continuously buy Bitcoin because I can see it going to 500K. And then I want to put another one on your radar, which is Google. Google is actually getting closer and closer to being a great fundamental buy, kind of like Meta is right now, because Meta has fallen more. So then it's a better deal. However, Google, they have their forward PE of about 27, but we've been loading up on Google since it was in the low 100s. We've been loading up on Meta since it was in the low 100s. So a lot of people are going to be kind of late to this, and they're going to miss out on the generational wealth switch from the super rich over to us. And remember, that don't mean that they're going to go broke and then you're going to be rich. That means that if they got 100 billion, maybe now they got 99, and then the rest of us get to split the billion. But guess what? If me and you got to split $1 billion and we both got 500 million, I think we'd be okay. So I love y'all. I appreciate y'all. And I encourage y'all to stay 10 toes down. Don't have any fear when it comes to investing. I look forward to seeing you in KGU. The link is in the top of the description. I told my team that you're rolling with me. Let's get it, family, and let's make money in this bear market. I see you on the next one, and take care.